Good morning everyone, welcome to our free YouTube video of the day at today Tuesday 8 a.m. October 13, and thank you all for watching and getting ready for our free video. And today, Apple stock to buy the new iPhone is the big question. Today we are going to have Apple event. They will present the new iPhone, and the big question is if they will buy it or not. But let's look into those charts and looking for Apple action. And what a big and insane move that we saw yesterday, and more than 6% stock move. And let's try to build an analysis here and try to see if somehow we were able to anticipate and see where the stock could go going forward. So Apple had a big correction on September, and one of the things, it gone below the A21 50-day moving average, and it was very bearish action here. And on this day, okay, on this day here, on this candle, okay, on September 21, and it printed a bullish reversal candle. I didn't, on this day, September 21, I didn't bought Apple, but I bought the cubes, okay? I bought the cubes, looking for the cubes. September 21, I bought shares at 261, okay? It hit, after hitting the low at $260.11, I bought shares at 261. I closed those shares intraday for a nice scalp, but see where it gone, okay? It gone all the way yesterday to 97. So more than $30 stock move here after, and I bought exactly the low from this correction. So very nice action. But let's move back into Apple and see where did we go. So on September 21 we printed the bullish reversal candle. So that's the first sign that bulls step in. And why was the reason to step in here? We had a gap down, okay? We also getting very near from this move on the stock after the earnings, the gap from the earnings. So it was logical that the bulls would step in. And when I saw that the bulls were stepping in, I decided to, it was the bottom on Nasdaq, so I bought the shares on the cubes. And lots of people also bought the shares on Apple, because it was one of the names that I was saying that the bottom, they were buying the dip at 103, 104, and they jump it very quickly. So after the reversal bounce, you look to where the stock is going to stop, and the stock stopped there exactly at 112.86 and pull back. On the pullback, on a bull case scenario, what you want to see? You want to see higher highs, higher lows. So on the pullback, you have a low at 103, you have the high at 112.86, and what you're looking? You're looking on the pullback to print higher low, and we had it. We had the pullback at 105, higher than 103. So when we have a bullish candle followed by another bullish candle here on a break higher, we are making higher lows. What you should expect? You should expect higher highs, and we had that higher high making higher high at 117, and we pull back. And where did we pull back? We pull back just to retest the breakout point at 112. And one of the things that I've been telling on the pre-market show, Eyes on the FANG, where I go every single day before the market open, I go with a trading plan for the FANG names: Facebook, Apple, Amazon, Netflix, Microsoft. You can watch it. And one of the things, while we are above 112, I'm staying bullish on the stock. And last week, one of the things that I was seeing bullish options activity on the name, playing for January and playing for a move all the way into $140. Not that does not mean that the stock is going to $140. What that means is that they are looking for upside, and looking for some upside exposure, and they not necessarily those calls were to January next year, that they will not hold necessarily those calls, but they are looking for upside. And what we had, those calls were on Thursday, and what we had on Friday big bounce from the 8 and 21 day moving average, and once again same thing as we saw here, after making higher lows, and we were making higher lows above the 8 day moving average, what is expectable? Start making higher highs, and boom, we had it. 125 yesterday, highs of the day. Now the big question is, how the stock will react to the earnings? No one has a clue, okay? No one can predict what the hell is going to happen next. For those that know me for some time, know that on these kind of moves, I usually trim my profits and take the profits out. Yesterday, I locked my profits on Facebook shares, I locked my profits on Activision, I locked my profits on JD, because I was heavily on those stocks, okay? So usually on the shares, when I'm in shares, I buy between $500 to $1,000 depending on the price of the stock, and I was heavily on the stocks on Facebook and Activision and also JD. So I decided to lock my profits, and I generate very, very nice cash flow just to start the day. And if I was holding Apple, I didn't have Apple. I already had locked my profits yesterday. Why? Because first, I don't like to trade events, okay? Either earnings or some kind of presentations or something like that, because they are binary events. On a binary event, it's yes or no. You cannot predict where the stock will go. Anything can happen, and I see here two possible scenarios. Okay, two possible scenarios. One is a possible fade, and we have a gap to fill at 116, and we can go and fill the gap. We also have the 8-day moving average at 117. Can that happen? Yes, anything can happen on the stock market, but honestly, I'm not expecting that. Okay, that can happen, but I'm not expecting. We need, for the bear case, we need below 119, and below 119, we go and fill the gap at 116, and we have the 8-day moving average at 117. We have the 21-day moving average at 115. When I'll become bearish only below 112. It was the biggest support, and that's my biggest support there. Okay, so can that happen? Yes, but honestly not expecting that. What can happen? I'm looking for possible two scenarios. One, it's if we go above 125.2 yesterday highs, we can extend all the way into the next big wall. We have a next big wall all the way into 128. It's a big level. If we go above 125, we can extend into 128. And that's a possible scenario, giving a follow-through from yesterday action. But the other one, and for options is the most painful one, it's an inside day. It's basically a non-event. It's staying between 125 and 119, keeping here the range, and that will kill the most of the options premium on the market. And that's why I don't like to trade into binary events. No one has a clue where the stock will go and how it will react. So if you are long, my opinion is play wisely. You should have taken profits yesterday on the ramp up, but if you are still long, trim 1/3 of the position after the market open, raise the stops on the rest, play against 119. That's the support. If it goes below, your stop will probably get it, and you can try a scalp to fill the gap at 117, 116, and from there we will reevaluate. If the stock reverses back up and goes above 125.2, you can add some more exposure, but remember that we have a big wall at 128, and that can act as big resistance. Once again, lots of bullish options activity, but into binary events is very tricky, so be very careful and play wisely. Okay, so before we go, I would like to give you just an head up about a trade that I had yesterday on Disney. It was it gave a very nice follow through for my analysis. The sad part is that the news only came after hours. So as you know, I have very strict rules on risk management. I usually don't hold options positions overnight. I can hold the stock, and I hold stocks and shares overnight, but on options no. Why? Because I cannot define my risk overnight on options. I can a contract on options can go to zero, okay, overnight. So I cannot define the risk and the stops overnight. On the shares, yes, I can, because we have after hours, we have pre-market. I can define my risk, but on options not. Okay, we can't. So that's why I usually don't hold options overnight. But yesterday, after the market open early in the morning, I decided to jump into some calls. It was one of the names that I highlighted on the hot stocks, the episode that I give every single day on pre-market, and I got some calls 1 to 6 around $1, and what I was looking for upside on the stock, and I would like to explain you. It worked very well. The stock skyrocketed after hours into $132, basically 500%. If you are holding those calls 1 to 6 at $1 from my entries, basically this morning, if the stock opens at 131, 132, you basically have between 400 to 500% profit. So basically 5 times your money overnight. It's insane. Basically $1,000 goes all the way. It was my bet, $1,000, 10 contracts at $1. It would go basically to 5k. So more than $4,000 overnight, $4,000 to $5,000 overnight profit. So it was insane. But I didn't tell you, it's part of the trading, it's part of the business, it happens. So I would like to explain you the rationale behind the trade. It was pretty much simple. Last week we saw basically a double bottom here, kind of a double bottom, with the stock printing a nice on Friday, a nice bullish candle, pushing above the 21 and going all the way and stopping right at the 50-day moving average. So what was the trigger? The trigger that I gave and the trading plan that I gave on the hot stocks episode was above 1 to 6, looking for this gap to fill at 1 to 8.1, and with the stock going above $130 with the next big wall at 132, 133. So, and the action plan worked very well, and that was one of the reasons I didn't hold the position. It was because I got into the trade before the trigger, before 1 to 6, and the stock hit 1 to 5.94 and it faded, closing $1 below. So that's why I closed the position basically flat, no profits, no loss, no profits, basically flat, break even. It was right at the same exactly entry point, and and the news came only after hours. Okay, it happens. It's part of the trading, and sometimes goes good, sometimes it's no good. Okay, it's not bad because I didn't have any loss. Okay, but I didn't take advantage of this situation. So first of all, congratulations to all those traders that held the position, that had some more patience and held the position overnight. Congratulations. Now what? The big question, now what's going to happen? In my opinion, if you are long at 132, 133, all the way from 131, $132, I believe this area, it should fade here, and you should sell here, okay? Unless it goes above 133, and above 133 we can go all the way into 136, 137. That's the next level, but we need to see it, okay? So after the market open, my suggestion is trim the hell off the profits, enjoy your money, and congratulations of the trade. If the stock goes above 133, you could have more $3 upside, so you can have and try some more scalp above 133 to try to go 136. But my opinion, the easy part of the trade was gone. It was yesterday. The entry was perfect, and but I decided my own risk management avoid me to hold overnight positions on the options market overnight. So congratulations to all the traders that got in, and thank you all for watching. Hope that this video helps you. If you like it, please give a like below, leave your comments, and don't forget to subscribe to the channel and turn the notifications on so you don't miss the next video. 8 a.m. from Monday to Friday, every single day I have a video for you, and trying to give the analysis and the best that I can from my own experience. Okay, so wish you all great trading, stay safe, and one of the most important thing of all, be happy trading. Thanks everyone, bye bye, see you.